Joining us now with his outlook, Saumil Parikh. He's a portfolio manager at Pimco. Saumil, this is the event where you all get together and kind of brainstorm what you think is going to happen over the next 12 months, right?
Yeah. Good morning, Guy. That's right.
So, what was the conclusion? What is the sort of the big picture outlook story? How much of a change are we going to see from the last 12 months?
Well, you know, at the global level, the good news is that global growth for the next 12 months is not expected to slow down substantially from what we've seen over the last 12 months. So if things go according to our forecast, this will be the first year in the last 3 years where global growth does not decelerate. However, that's not without significant divergences between the performance of the US economy, for example, which is looking stronger in 2013 going into 2014, and the European economy here, which is expected to remain in a recession, perhaps a deeper recession in the first half of this year, which gradually ebbs in the second half of this year.
How big a risk is what we're seeing in Cyprus to your thoughts on where Europe goes? It's a very small island with very big problems. How significant is it in the big scheme of things?
Yeah, you know, from a global economic perspective, all eyes are on Cyprus, not because of the economic impact of what's going on there, which is, you know, somewhat of a tragedy to begin with. However, the precedent that is being set by European policymakers with regards to the Cyprus bail-in is an important indication of how the European debt deleveraging might progress going forward. Global investors are very keen to know whether the deleveraging in the Eurozone is going to take the form of what we've seen in the US or the UK, where central banks are extremely involved and extremely helpful in an orderly deleveraging process, or whether this is the beginning with Cyprus of a more disorderly deleveraging process for the European banking system, which could prolong not only the recession in the Eurozone, but could have implications beyond that.
And what are your thoughts on that? And what impact would it have into the BTP trade, which has been very strong, into the Bono trade, which has been very strong? Does that bid remain, given the risks that are now emerging?
Yeah, you know, at the Cyprus level, you know, our view is that this decision is unambiguously a mistake. I mean, the Eurozone, being a governor of one of the major reserve currencies of the world, has to respect the deposit insurance scheme of each member nation that participates in the currency union. So at the onset, we think that this is a policy mistake, that this is something that European policymakers are likely to realize and are realizing as we speak today, and will probably take a step back from to some degree over the next 48 hours or so. So with that in mind, we think that the policy mistake or the impact of the policy mistake can be curtailed from preventing knock-on effects on, let's say, the Spanish banking market or the Italian banking market. But the truth will be known once we know for sure what the final resolution is over the next 2 days.
Just very quickly, let's just run through what happens in the States, closer to your bailiwick. Let's talk a little bit about what happens next. The dollar is gaining traction. That is now very clear. How does that feed through into other asset classes? Where is the Fed as we start this two-day meeting in terms of policy withdrawal, or at least sort of stabilizing the situation? Give us the sort of the next 6 months to 12 month scenario.
Yeah, the dollar is strengthening mostly because the US economy is now clearly looking like the strongest economy within the major developed economies. So from a funding currency perspective, the dollar is the least safe funding currency as we look forward in time. The Federal Reserve today is likely to strengthen its message of being an extremely dovish central bank, a central bank that has pledged many times to remain on an easy monetary policy trajectory well into the US economic recovery. And we think Ben Bernanke will take the opportunity today to silence or to at least muffle some of the hawks that have spoken out against the easy money policies over the last month or month and a half. So don't expect a lot of fireworks from the Fed today. Expect very dovish language from the chairman in the press conference, and he is setting the stage for a continuation of easy money policy well into 2014.
Saumil Parikh of Pimco, sir, thank you very much.